Well, Hindalco last week came out with a strong set of numbers. In fact, revenue was up when you look at it on a quarter-on-quarter basis by 30%, and when you look at it on a year-on-year basis, it was up 82% versus our expectation of 15%. Revenue came in at 17,290 crores for Hindalco. When you look at EBITDA as well, it grew 3x on a year-on-year basis from 852 crores to 3,038 crores and was up almost 50% even on a sequential basis from 2,096 crores to 3,038 crores. Strong set of numbers when you look at it. EBITDA margin came in at 17.6% versus 10% when you look at it in Q2 of FY21 and 15.76% in Q1 of FY22 versus 17.6% in Q2. So when you look at it overall, really strong numbers. PAT came in 8 times higher when you look at it year on year, from 200 crores to almost 1600 plus crores. And the India business PAT grew 4.5 times when you look at it on a year on year basis. Aluminium EBITDA came in strong at 42% margin, which is the highest margin in a decade. And the consolidated net debt to EBITDA came down below 2 times from 2.6 times when you look at it sequentially. So real deleveraging happening here. And the Novelis commentary was important. Novelis quarterly adjusted EBITDA per ton came in at $571, which was up 16% on a year-on-year basis. Now CLSA and Credit Suisse both have a buy rating on Hindalco. CLSA believes that the target price is 570 a share, which is a 25% upside over the current market price of 456 rupees a share. It believes that the Q2 India EBITDA beat estimates after strong Novelis result and says that Hindalco has shown a strong performance on all fronts in Q2 of FY22. It, however, believes that cost inflation is likely to peak in the third quarter, so still some amount of inflation to go. And lastly, believes that a buy is basis the resilient earnings and undemanding valuation, as they call it. Despite this, mind you, Hindalco stock has gone down 16% in the last month. And when you look at it in the last 6 months, it's underperformed the Nifty. It is up only 16% in the last 6 months. So really the stock taking a beating in recent times. Credit Suisse also on Hindalco maintains an outperform, saying that it is the top pick in the metal space for Credit Suisse. With a target price of 640 a share, that is a 40% upside for potential investors. And it says that the all-round result is largely the reason why they believe that Hindalco will outperform. It says that the result was obviously a beat and expects the street to upgrade its estimates and expects LME aluminium prices to remain elevated. So on the back of good global pricing, it believes that aluminium pricing will be higher even for Hindalco, which will drive profitability, and expects Hindalco's free cash flow yield to be in the 12 to 14% range in FY23 and FY24, and also believes that Novelis would be the main deleveraging driver for the company. Overall, a good set of numbers from Hindalco and a strong expectation from brokerages for Hindalco going forward.